ask already to have the panelists go up. Thank you. In the meantime, thank you very much to all attendees today here, and of course the organizers and the panelists of this second roundtable. But before that, I would like to thank somebody who hasn't been thanked already yet, and he's really the heart of the organization of this day, which is Stefka Topalova, which is the Secretary General of EFPA Europe. And please, let's thanks and applause for her work. EFPA Europe is a small organization with a lighter structure, and all the work really sits on her, and he is the one that is mainly the responsible that today we are here today. Okay, we have theoretically 4 panelists because one of them has had personal problems and he cannot be with us, which is Rasmus Andresen, the member of the European Parliament. We have with us, I think it's Aleksandra is already here. Good. And Jacopo is here, and William has arrived. Perfect. We have the 4 panelists of this second roundtable today. It's great. Well, I plan to start saying, well, we now have, and we know everything about financial health. Now is the time to see in which way financial health is going to help to the objective, so the European Commission, or mainly to the main objective, which is to develop savings and investment union. But the previous roundtable has already dealt with different issues of this savings and investment union, and it is logical because, as a matter of fact, in Europe, in the financial sector, a lot is being organized now around the project of savings and investment union. But there's still a lot of things to talk about that. And we now can confront these financial objectives in the financial sector. Basically, let's remember, increase investment resources for all that investment that is needed in Europe in the following years. As a help to complement retirement pensions, also a point that has been already mentioned here, and also to provide alternative finance to SMEs. This is as a sub-objectives of the main objectives, which is how we increase competitiveness in the European Union. And as a complement to this objective, what is the role of financial advice in all their ways to be developed in the, what is the role of financial advice to channel these savings into investments, or better, in which way we help to transform savers into investors and overcome an important and a very important European deficit. To talk about that, well, we have already introduced the panelists. I'm not going to that. I'm going to give each of the panelists 5-6 minutes that you need to introduce your initial vision on the subject, and then we can go to the questions and answer debate, and in general in questions or particular questions for each of the panelists. Then I think it's better to start from the most generic to Andrea Liesenfeld, which is the Deputy Director at DG FISMA on retail financial service. Thank you, Andrea, because this is already the second or third time that we ask you to participate in an EFPA event. To start, in that way, we will know a little better what is the position of the European Commission, and then to go to the private sector and to see in which way we say the contrary to what you say. No? Okay, Andrea, please.
Does that work? Yeah. Does it? Very good. So hello, good morning, everyone. Just to be clear, I'm not deputy director. I'm the deputy head of unit. Don't want to take too much. And so I'm the deputy head of unit of the retail financial services unit and the team leader on retail financial services. And in this capacity, I've been responsible for leading and coordinating within DG FISMA the retail investment strategy. So this is one of the parts, and maybe probably the biggest part, that I've been putting my time into in the last years. So indeed, I don't have much more to say on the SIU, because you've just been listening to our cabinet, and so you've heard it all from the source. Why we believe SIU is very important, and I guess we all agree on this. It's key for people, but it's also key for economic competitiveness, for making sure the money goes where we need the money. And this is, I mean, it was always super important, and it's getting more and more important, of course, also thinking about geopolitics. So how do we want to go about? You've heard we have, and you all know, we've done a communication on SIU not too long ago, and today we're going to have some additional measures that had been announced on financial literacy strategy. We're going to have the recommendation on the SIA, but we've also, of course, and I've already mentioned this before, made a proposal during the last mandate, of course, but this is an important part, nevertheless, of the SIU, the retail investment strategy. And I guess this is a very important piece of legislation for financial advisors. Now, what is our idea on financial advice, and why have we then made some suggestions in the RIS as we have made them? Well, we believe that advice is crucially important. It is important, and it will remain important. I mean, we have digitalization there. We will have robo advice, which is is having track. We also have guidance, which is also very important for getting people into investing. But this might not do the whole trick. So we do need financial advice. We do need people that explain to the clients why is it important to put their savings into capital markets and what they should best invest in. So I do believe we also probably all agree on this. And we do believe what is important is that this is simple, that is cheap, available, but we also need to make sure it's good advice. And today, this is not always available. You will today have advice which is simple. You will have advice which is not necessarily cheap, but you might believe it's cheap. And you have often good advice, but maybe not always. That's at least what our impact assessment has concluded. And for this reason, we have tried to put some measures in place. One advice which is sometimes difficult to find is independent advice. Independent advice, not based on inducements, is sometimes very difficult to find in many areas. In Germany, the number of, it's a huge country, huge amount of people, but the number of independent advisors is very limited. Why is this? Well, they don't really have a business model against inducement-based advice. So we've tried to push this a little bit, to give them a little bit of a better chance by suggesting simple advice. Whether this would do the trick, look, it's a hope, it's a try to make it simple, easy, independent. Whether this is going to survive the negotiations, we don't know. But of course, that was an important idea. We would have wanted to at least make sure that independent advice is available so that clients have a choice. We've also suggested additional measures. We have suggested to raise professional qualifications to make sure the investors are good. We have suggested to have for IDD something that doesn't exist yet, which exists in the MiFID area, that if you call yourself independent, you cannot take inducements. This exists in MiFID, but not yet in IDD. We have suggested that. And we've suggested the client best interest test. Now, in the discussion before, we've heard that this is all, the client journey is all very complicated. And we do agree, it has to be simple. But, as I said, it also needs to be good. And I would like to challenge you a bit. Does it have to be complicated today? I want to speak about my personal experience. Maybe you have this yourself. You can go through the suitability assessment in a very quick way. You can do this online. You can do this with a number of questions, and you can be done within 10 minutes. But you can also spend 1 hour and longer at a bank going through a long questionnaire. This shouldn't be the case. If this leads to any deterring people, then this is not the right way. But it doesn't have to be like that. If there are ways we can simplify this, absolutely, we would be absolutely in favor of doing that. Now, the client best interest, you're going to ask me, why are you suggesting anything additionally, given that it's already complicated? Now, the client best interest test doesn't require one additional question to the retail investor. The client best interest test is just trying to limit the discretion a little bit of the advisor. And why do we think this is needed? Well, we have recently actually also had some mystery shopping, which showed that whether you do a proper suitability assessment doesn't necessarily guarantee that you will recommend the good product. It might, but it might not. And therefore, we felt like it is important to spell out the obligation that exists today, which is to act in the best interest of the client, to spell this out a little bit clearer what it means. Of course, we've again tried to simplify this, but to keep the gist of it. And we think this is important. Whether this is going to survive negotiations, who knows? But that is the rationale behind it. And yeah, look, this is where we are. I personally, I think it's very important that we do something about it and that we are clear. Why do we do this? Why is it important that we think we need to act in the best interest? Why do we think it's important that people get the right products, which are not too expensive and where they actually get something out of it? Well, if they don't, why should they invest? They're not going to come back if they get products which where they don't benefit from. That's my...
Thank you, Andrea.
That's the end of it.
Thanks, Andrea.
But very happy to discuss.
Let's go to EBF. Jacopo, could you take the floor?
Yeah, thanks a lot. So just by mean of introduction, very quickly. So I'm Jacopo, responsible for capital markets policy at the European Banking Federation, so the EU umbrella association representing 32 national banking associations. So just to start, I thought I would sort of articulate my introduction around two main points. I was actually thinking about one, but listening to you today, I wanted to introduce another one. So in no particular order, I'll start from the latest one, which is again around the role of advisors. I think so the statistics you have showed this morning, I think they convey a pretty clear message. There one struck me personally, correct me if I'm wrong, but I think there is one passage in the report where it says that among the sort of chief goals for savings is holiday, is planning for holidays is 44%. So there's a bit of a disconnect in a world where here thinking about the pension time bomb and the fact that, you know, people my age won't be able to rely on, you know, Pillar 1 pension systems for their retirement. We are chiefly planning for holidays with our savings. It's sort of self-evident. There's a lot of gap to be covered, which leads me to sort of a strong personal conviction that the EBF shares that the role of advice has to be strengthened, and long-term planning, especially for, you know, different reasons. Your industry is sort of challenged with a number of, you know, developments that require careful attention. AI is one of them. The value of advice for us for long-term planning is especially that of helping sort of, you know, us people adopt a holistic approach to their finances, so not just planning for long-term goals, but also sort of expense management, money management, etc. To help people make use of efficient tax vehicles. It's also one of the sort of chief values of advice, and especially I would say two things: building trust and sort of making sure that there is an entry point for people who have not started investing yet. This is, I think, key. These trust and entry points are actually, I think, one of the two key objectives of the SIU. And, you know, obviously in EBF, we have discussed with our members what's going to be the sort of the main value also of the savings account, investment savings account proposal is coming out. And I'm personally believe that irrespective of how it's sort of designed and whether or not it will be applied in the same way across member states, its chief value is that it offers yet another entry point that is closer to the sort of attitude of most European savers, which is to keep the money in an account. Why? Because it's risk-free, and we are extremely risk-averse in Europe at the moment. It's not cost-free, but it's risk-free. So again, great value of advice and financial planners. The role of EFPA in this is, I think, particularly important because, you know, leveraging the competences of advisors is one way to cope with industry developments such as AI. So great shout out to the work you're doing as well. Another quick point, but I think I want to make this point, and it's been, you know, the CMU or SIU has been 10 years plus in the making, and it may appear self-evident to most of you, the point I'm about to make, but I can assure you it's not self-evident everywhere in Brussels or across Europe. And is that, you know, banks are fan of the Capital Markets Union, the Savings and Investment Union, and of sort of moving savings into markets. That is something that works for everyone. It works for the investor, for the saver, because of course you can just start making use of compound returns over time. You can sort of you can counter effects of sort of monetary risk of inflation. It works for banks. It works for banks for two chief reasons. One is there's a business case for banks. You know, it's good for compound fee generation. It's good for client fidelization and loyalty. It's good for diversification of income streams for the bank. One example, you know, more saving tap into the market. Companies are able to acquire more investment, they produce more, and they may return us to the bank in the form of corporate deposits. So there's a number of reasons why the business case works, but also developing and deepening capital markets is a strong, you know, sort of priority for banks, for the EBF, because banks are not competitors to markets. They are users and service providers of markets. We are advisors, we are issuers, we are investors ourselves. So a number of reasons why I feel it's always great to start by reiterating the message that banks are a big fan of capital markets and the new Savings and Investment Union Action Plan. So I'll stop here and happy to go into the specifics.
Thanks, Jacopo. It's your turn, William.
All right. Transparency is very important, right? So out of transparency, just like to explain that I represent Insurance Europe. So this is the European Insurance Federation. So that's done, clear and simple. Just a word, perhaps, starting to to say how grateful I am for EFPA and Better Finance to co-organize that event. It seems the date is not really a coincidence, right? I think this is extremely timely, so well done. Also well done for the research that you conducted together. I think listening to what was said this morning, reading also the report, at least the executive summary of the report, I can see that we got a huge challenge in Europe, and I think that only confirms something that we knew before. Europeans are really good at saving money, but we're not investing enough. And I think if there's one thing that we need to change, it's really the investment culture in the EU. We need to improve that very much. And I think that what you're doing between EFPA and Better Finance to try and build bridges, to work together in that direction is actually extremely welcome. Because if we want to make progress, we really need to make sure that efforts are being taken all across the board. Now, from my perspective, from an insurance perspective, when I think about improving the investment culture, I think we need to take that from an holistic way. That's a word that we're using a lot, holistic. For me, that simply means that we can't really look at one specific issue in isolation. We need to look at different types of challenges all together and address them. In the same way that the Commission is doing with the Savings and Investment Union. We need to look at the offer side, so the products. We need to look also at a consumer journey. We need to look at advice. We need to look also at the financial education. So if you don't mind, I'd like to take that one by one. The first one is the product side, the offer. Here I'm really looking forward to reading the Commission's recommendation on the savings and investment account. If there's one message I would like to convey about that one is that when you get a very strong card in your hands, when you get a winning card, a king or an ace, you play it. You don't let it gather dust. And what I mean here is insurance. We got a huge diversity of life insurance product, pensions product, catering for the different needs of consumers across Europe, for the different types of risk profile as well. Insurance are products that are not only providing investment opportunities, but also financial guarantees. And this element is exactly what savers who are risk adverse in a huge majority in Europe need to their investing in the capital market. And we got the insurance protection element, so risk biometric risk coverage, which is exactly what we need to address the increasing protection gap across Europe. And finally, we got a super dynamic, super diversified and wide distribution network. We got financial advisors, we got brokers, we got agents, we got banks, we got direct sales. They can sell or advise in a digital way, face-to-face. We see a number of advisors being really connected to local communities and very close to people. The second point is about the consumer journey. And I think here we got a golden opportunity with the retail investment strategy to try and streamline that journey. I mean, if I look at the insurance perspective today, it's almost mission impossible for a consumer to purchase an insurance-based investment product. It takes extremely long, it's super complex, and it's super burdensome. And of course, that's an issue for the distributors, but also for the consumers. And the same goes for the disclosures. I think, everyone agrees that today we've got an issue from a regulatory perspective, which is information overload. Can we take the retail investment strategy as a golden opportunity to look at that and try to streamline these disclosures and make sure that they focus on what matters to consumers? There was indeed mystery shopping that was done by EOPA recently. And one of the key findings is that having a longer, more burdensome, more complex purchasing process for the consumer doesn't lead necessarily to a better consumer outcome. And it's pretty much the opposite, in fact. So let's draw lesson and let's try to address that in a constructive way. Then the financial advice. I think everyone agrees here that it's absolutely crucial in the Savings and Investment Union. And it's crucial also to make sure that people are moving from investment attention to investment actions. And for me, that's absolutely necessary then to preserve access to advice. That's also important as part of the return investment strategy, and that we keep this diversity of distribution networks. As I was saying before, I think one of the wealth in insurance is that you get so many different types of distribution channels, and that's a wealth, and we need to preserve that for the future. And finally, financial education. Again, I'm really looking forward to reading what the Commission is going to produce with their strategy. I've been waiting for a very long time for that document, I have to say. In Insurance Europe, we've been calling on the Commission to make efforts and be ambitious with that topic for years. So we're actually very pleased to see that, things are being done now. I'm really hoping to see the European Commission putting a bit of pressure on member states to move forward with a financial education program. I hope also that the Commission is going, and I hope this is not recorded, I hope the Commission is going to be putting a bit of pressure on the European supervisory authorities, because I'd like to remind everyone that the ESAs have actually in their mandate to deliver on financial education, and I don't really see that in reality. So we need to press them to do a bit more there. And I hope the European Commission, and I know there are limitations in terms of competencies there, but I hope the European Commission is also going to take their own initiative to try and do something on financial education and promote it. I don't know, that could be supporting, the exchange of good practices between member states. That could be helping the OECD also in their competence framework. That could be also putting a bit of pressure on member states to include financial education in the school curricula. And one point that is very important also from an insurance perspective is the inclusion of insurance literacy in this financial education strategy, because every time we speak about financial education, we think about banking, budgeting, investment, but very often insurance is overlooked. And I think that's a strategic mistake to overlook insurance. It's all about risk awareness, risk management, risk understanding, long-term planning, retirement. So everything that is super important for people, well-being, and financial resilience. So for me, if we really want to be successful, we need to act on these 4 different elements. And that will hopefully help to change and improve the investment culture in Europe, and also to make the link with the report. It should help also in improving the financial health of Europeans.
Thank you, William. Now it's time to Aleksandra to talk on behalf of the users of all this.
Yeah, thank you very much. Thank you once again to EFPA for the common project and the research that we have done that has some very interesting findings. And to the question, if we can have it all, if we can have good quality advice, if you can have investor protection, digitalization, I think it is possible under the condition that we really design the policies quite well. And with that, of course, comes the policy of the European Commission, the proposal on the risks, which is very valuable. And we also share the hope of Andrea that the very good, valuable elements of risks are not going to get lost in the negotiations. But high quality advice, for us, high quality advice means that it delivers good outcomes for consumers. And I think that the context of good outcomes for consumers is the most important one when we talk about savings and investments union, channeling the investments into the real economy, and activating and encouraging retail investors to invest. Because if they do not have good outcomes, if they do not have the good, real positive returns, what is actually the incentive for them to invest? Unfortunately, with the annual report of Better Finance on the real returns of pension savings, we have been talking about pensions and the pension time bomb quite a lot today, shows that most of the EU citizens are invested rather badly, and that the products that they are invested in are not bringing good results for them. What does it mean for them? It means that they will not achieve pension adequacy. And we agree with EIOPA very much when EIOPA says that actually the biggest risk of an investment product is not achieving the pension adequacy and the investment goal for retirement. So with this, we think that financial education and financial wealth are very important. But in order to get into the financial wealth, financial education alone is not going to do the trick. And as much as I'm looking forward also to the financial education strategy today, I'm looking quite much more to the recommendation on the ISK, because actually the ISK, the investment saving account, this was one of the first topics that when I joined Better Finance in 2017, we were meeting with the Commission and we were advocating for doing something about it, promoting it more. We have seen already back then that actually Sweden was one of the countries where the citizens could count on the better outcomes when it comes to pensions. And we were also informed and we knew that it was very much tied also to the ISK. So I'm looking very much towards that and to see that 7 years later it was possible to finally do something about it. And it's maybe only recommendation, but still we hope it could be a game changer if the member states have the courage to learn from Sweden. Financial education, financial advice, and digitalization. We think this is the mix of three things that really can change the situation of many EU savers. And financial advice probably is one of the most important for us. So with financial education, it is of course the basis for everything in understanding some basic financial economic phenomena is the basis for a citizen also to be able to enter a meaningful dialogue with an advisor and to understand what the advisor is telling them. Is also very important for them to ask the right questions to the advisor. However, there is also research that shows that financial education alone is not going to the trick for the citizens. One of those research projects was done for the Central Bank of Ireland, and it showed very clearly that there was no correlation between very high financial education of the citizen and taking proactive action. So Ireland has done quite big campaigns trying to inform citizens that they need to do something about supplementary pensions because the public pensions are not going to be enough. And there has not been much traction. So there has not been much change in the society. And the financially literate ones also have not undertaken any steps to do something about their pensions. So therefore, we believe that also auto-enrollment would be a good solution, driving the savings towards investment and going towards the direction of savings and investment union. But again, the condition for better finance here is that people and citizens would be enrolled into good quality products. For us, of course, it means good, decent returns. And when it comes to good, decent returns and different products that you could invest in, as William already mentioned, insurance products could be one of them. He mentioned also capital guarantees. We need to remember that capital guarantees are quite costly. So you need to really be able to provide very good performance to offset the cost of the capital guarantees. And from Better Finance report, we see that currently it is still not the case. When it comes to financial advice and financial advisors, how to improve the quality of financial advice, how to improve the access to advice, I think that retail investment strategy had some very good proposals. One of them is, of course, the best interest test. Currently, retail investors and financial consumers in the EU pay a very high price of bad advice. We have also seen some of our colleagues from different organizations had already campaigns when they showed how high this price is. And we see it also again in our report when we look at the real returns that people are currently getting from their pension products. So with retail investment strategy in mind, apart from the best interest test, and we think it's crucial because in order to get good quality advice, the incentives of the advisors should be really aligned with the interest of the consumer or investor that goes to them. Currently, it's not always the case. There was also a big study from the Commission from 2018 that showed that most of EU citizens, when they search for advice, they would rather go to their bank advisor. And then at the end of this journey, they would rather be advised some of the products from a very limited portfolio from advisors, quite often complex products, not the simple ones. Almost never were they advised, for example, ETFs that are quite simple products. And in the study, it was also mentioned an experiment done when people were informed that during the process of the advice, some of their wealth would be transferred to the advisor because of the commission paid. Many people were actually not willing anymore to follow up on the advice. So We also should probably do something right now about raising awareness of people, how the commission-based system work. And definitely, as William also said, transparency is important. So very clear, also transparent information on how much the cost of inducements and commission is included in the final price of the advice process.
Thank you, Aleksandra. I think we will have time to go. We have no more than 15, 20 minutes for the debate. Let's please just answer shortly, because there are a lot of topics. I think it's better you give your opinion shortly. Since Andrea has mentioned repeatedly the concept of independent financial advice, you talk a little bit more about quality financial advice. I would like to deal with a little bit that. When EFPA was created 25 years ago, let's be sincere, we were thinking at that time that independent or purely independent financial advice, fee-only financial advice, was going to dominate the distribution in the future. 25 years later, we have seen that some tries to go to independent financial advice has ended in no financial advice in certain places. And now more and more people is talking about, well, let's at least assure that there is transparency and control conflicts of interest. What do you think about that? I mean, should we still go for independent financial advice as we believe it should be all these years ago? I understood, Andrea, that this is still the position of the Commission, maybe.
Look, I mean, we see reality. There is not a lot of independent advice out there. But of course, independent advice is good. It's good because if you go to an independent advisor, you have to pay for it. Indeed, you understand what you pay. There you can be sure people understand they pay. When you have the inducement and you have this explained somewhere, people might not understand. But when they have to pay directly an advisor, they will understand this. But then you have that these advisors, their interest is aligned with the client. So that is a good thing. But I'm not saying that necessarily everybody should only go to independent advisors. No, but would be good to have a choice nevertheless. And that choice very often is not there because it's very difficult to actually find independent advisors today. Look, that's...
Aleksandra, do you think that you're thinking the right way? I mean, now that we need to convince the savers to become investors, we also need to tell them, and you need to pay to get this advice to become investors. Is that realistic, according to you?
Yes, well, for the time being, investor in any event pay. I do not pay. Yeah, and they do not pay for advice most of the time. They pay for the sales. So quite often the advisor, when they think they are going to advisor, they're going actually to the salesperson, and the salesperson is remunerated by the sales. So if the investor leaves then the room and they have not bought the product, the commission will not happen, even if they were advised on something. So I think, and the commission study showed it, most of the people do not understand that. They go there and they expect and they think they are getting advice free of charge. Well, in fact, they are going to be paid trailing commissions over the years. Then there is the question, will they afford advice or not? Somehow they are already affording this, so they are paying for the commissions already, so evidently they can afford it. The question, of course, is what if this fee is one-off and you have to pay it upfront? And of course, this can be a problem for some of the consumers, but the finance has done a case study. We have taken the French market, we have taken an independent advisors from the French market and the fee they charge. And we have compared an investment of 10,000 euros and how this would play out for them, whether they would be paying with a trailing commission for the product, or if they would pay with an independent advice and a fee for that. And they were still much better off at the end of the day when they would pay for a fee-based advisor.
Yeah.
And if I just may add one thing, you mentioned also advice gap. We believe that currently there is advice gap in any event, since, like Andrea mentioned, in most of the member states, the access to good quality independent advice is very scarce. The choice is not there, and the people do not really have access to it. So they do have access to salespeople offering sales pitches, but they don't really have access to good quality advice.
Thank you. Just to close that subject, Jacopo, William, do you believe that with transparency is the solution to all this situation now? Is enough? I think William claimed for that. Huh? Transparency, I mean.
Absolutely. Transparency, when it's well done, it can help in a number of different respects. Just to come back to advice, I think that's very important for everyone to understand that advice is actually not coming from free. This is a service that needs to be remunerated. By the way, even when there's no advice provided, there are a number of services provided by the financial advisor that needs to be remunerated. And I'm thinking in insurance about the demands and needs test. I'm thinking about disclosure provisions. I'm thinking about all the support during the claims settlement and management. Now there are different ways of remunerating advice. We know there's a commission-based system, there's a fee-based system. Is there one system that is better than the other one? I'm not entirely sure, actually. You know, with each of the different systems, you have pros and cons. One of the issues with the fee-based system is indeed the advice gap. I think the British experience has demonstrated that there is an issue with the advice gap in case of a fee-based system. And I think in the UK, they're still trying to overcome that issue. There's also the risk of an advice push. And the same in the commission-based system. You also have pros and cons. So the question for me is, how do you manage to mitigate the potential drawbacks of each of the different systems? So I don't think one system is better than the other one. As I was saying before, I'm actually claiming that diversity is good. So it's good to find on the market different types of distribution channels that can be remunerated in a different way. And then up to the consumer to make their choice. Transparency in both cases is very important. But the question is, how do you do transparency? And again, here the issue would be, the temptation would be to do too much transparency. I mean, we've seen it with the PRIPS ID, for example. You know, you simply pile up different elements on which you want to be transparent. And at the end, in a PRIPS ID, you have more than 20 cost elements that are being disclosed through this key information document, which means at the end that the consumer,
you know, overwhelm the consumer, right?
Completely overloaded, yes.
Jacopo, would you like to close this?
Yeah, no, thanks. I'll be telegraphic. I mean, I principle echo most of the points raised by William. It's a complex topic. I mean, I personally would observe that, you know, these were the same discussions we were having at least 2 years ago when the RIS was launched. And in the meantime, a lot has happened. Diversity is good. Consumer choice is good. We should work on that. Transparency is there. You know, inducements, for example, are well framed by the current MiFID framework. They need to be reported. They are itemized. They have to be linked to quality enhancement criteria in MiFID. So we think transparency in there. If, you know, there's always scope to work further on making sure that disclosures are well understood. That's, you know, obviously a good thing that we should be doing together. However, I think, you know, one thing we should focus on is really the entry points. Obviously, as William said, different ways of accessing investments are there. There's a fee-based advice model. There's an independent model. There's a self-execution model. They all have, you know, strengths and values. You know, the non-independent, let's call it this, the fee-based, sorry, the non-independent or commission-based model value. One of them could be, for example, that it actually leverages existing relationships with your bank, which is, again, speaks about that entry points that are the sort of policy priority of the SIU agenda. I mean, the point is execution. It's time for execution. It's time to sort of go and get idle savings. I've explained also before that this is a good thing for everyone, for banks included. So it's about those entry points, and then trust and money need time to sort of to work for the interest of the savers. So I'll stop there. Obviously, I hope it's clear, but.
Thank you. Change of question. More than a year ago, there was the Letta and Draghi reports, whatever. They say something very clear. We don't have a lot of time to do these kind of things. Now Draghi, after 1 year of his report was published, and more since we knew what the report included, has said that he is really disappointed about the rhythm of advancing in all these issues. Is that he's just an alarmist? We have more time, then we should not be worried about that. What do you think? Are we in the right mood to do that? What is your evaluation of this initial CU development? And according to you, which should be the first priority now in that sense? Whoever.
So in opinion of better finance, I mean, the one and very big issue we have in the EU right now is really ticking pension time bomb. And we think this should be really tackled in the first step. When it comes to the sense of urgency, I think this should definitely be very clear to the member states. And as much as the European Commission can come up with good proposals, hopefully one of them we are going to see today on the ISK, ultimately it's the responsibility of the member states to deal with the topics and hopefully also learn from the good lessons they see in other countries. And here, of course, I think about Sweden. There is a good example. They have been very transparent and very vocal on what can be done and how it can be done to improve the situation of citizens, of how to make them and encourage them to invest. Simplicity, tax incentives are the way to go. And the question is if the other member states have really the guts, the willingness to do it.
Well, William? Andrea?
Right. Yes, of course. Yes, of course, I would agree with Mr. Draghi. We need to act and quickly. Of course, the challenge outside of Europe is huge. We see things changing there. And I think this is even more pressing for us to look inwards and make sure that we got a more integrated market within the European Union. That makes all the different initiatives in this SIU more pressing than ever. But at the same time, we should not mix, quick rapidity and quality. So we need to make sure that we move fast, but at the same time, we do it right. And that's really a difficult balance. I would not like to be, in the shoes of the colleagues from the European Commission now, because the pressure is really, really strong to deliver. There are a number of things that you can change overnight. We spoke about financial education, insurance literacy. This is taking time. That's an investment and a long-term one. The fact that people are risk adverse in Europe, this is not going to change overnight. So this is also something on which we need to start working, the sooner the better. One thing also I want to say, and that's connected to what we discussed before, is the advice. I think I completely agree with what was said before, but for advice to be helpful and useful, we need to make sure that advisors in the end can spend some time with their customers. And what is a bit worrying for me now is actually the increasing number of requirements that advisors need to comply with. Because the more tests, templates you need to fill in and you need to make, the less time you can spend with your customer. And of course, this is a concern for us because this is also creating a kind of tick-the-box culture where we need to move forward more towards a customer-oriented culture.
Anybody wants to say something about this, please, Andrea?
Yes, on that one, indeed. First of all, I would like to also get back on the issues on transparency. Now, we do agree that transparency is super important and that it's important to make it very clear and simple. For that reason, we have tried with the PRIPS kit to have a dashboard, to have it in the beginning, very clear what actually the costs are, the expected performance, just, very few parameters that might help you compare. But I can tell you already that can lead to opposition. You would think that's a very easy thing to accept because it's just transparency, but even that can lead to opposition, maybe because transparency is not always wanted. But I leave this to you. But the second thing I want to say about transparency, as I said, is key, but nevertheless, we have done also studies. Transparency, we have to be realistic about what it can achieve. Transparency is not the silver bullet for everything. Yeah.
Okay.
On the question of economics, look, it's not for me to say I'm not an economist. I'm a lawyer. I believe that it is important that we move. I mean, just looking at demographics, but of course, I'm in no place really to say this. But I'm pretty sure this is correct. But even more, how frustrating can it be that it's so difficult to move forward? We all agree that something has to be done, but then it's very difficult actually to do something. And on this topic that William has just said, I think we agreed to disagree on this. Yes, it has to be simple, but it can be done in a simple way. Put your questionnaire online, let your clients fill this in beforehand, and you have all the time with your clients then to discuss things. It can be done in a simple way.
Jacopo, if you don't mind, I will give you the floor also for the next question, and you can deal with anything of the previous one. Let's imagine that we are successful in convincing the savers that they need to invest better or invest more. Are they going really to invest in Europe, or this additional investing is going to go away? I put you an example that is we can see in each of our countries. Now it's, for instance, new investment funds devoted to defense companies. They are managed mostly by American companies, American money management companies, and most of this investment is going to US defense companies as well. Can we, the problem is we maybe eventually are going to convince, but are they really going to invest in Europe? And how we convince, in addition, that they need to be investors, that they should invest more in Europe? But let's start by Jacopo.
No, I'll try to be quick. That's the question of the questions. I guess it's very, very, very difficult to answer shortly. So just briefly on the SIU, sense of urgency is absolutely there, fully shared. I think there's an issue of falling into the survivor biased trap there of not acting in time because it doesn't really hurt. We're talking about it, but people are not yet seeing, quote unquote, their sort of pension systems failing yet. So we know it's going to happen, but it's not seen yet. Therefore, it doesn't hurt. Therefore, it doesn't trigger grassroots movement yet. So there's a survivor bias problem to be overcome there collectively. On sort of, sort of moving European savings towards European companies is a laudable objective, is an industrial policy objective. It mostly depends on, for example, conditionalities attached to tax incentives deployed by member states. Member states have schemes, some of them are in place that do that, others do not. One of the key strengths of the ISK, for example, since we're talking a lot about it, is that it's actually quite open. And I would dare to say the tax incentive or the tax break is not even the main reason why the take-up of the ISK has been so impressive. Is first of all, they take 40 years to build an ecosystem surrounding of investment culture and trust, but also it's the sheer simplicity of opening and using it and the reporting that it's done for you. These are the key reasons why the ISK is so successful. So yeah, I mean, there's a lot of talk about the EU being a net exporter of savings and a net importer of investment. I'm not sure, there's anything we can pull off in the short term to really change that. My personal view would be to get people started in investment is priority. More investments will flow in Europe, where we also become more investable ourselves when the returns generated by our sort of high innovative companies in Europe are there, and there is a innovation gap that Draghi has also very well underlined in his report, in our economy, in our SME sector, and so on. So it's a difficult question, but I guess get people started is the #1 priority.
Do you think anyone on that, or shall we? Okay.
Yeah, that's a very interesting question that comes up quite a lot, whether the EU investors should be forced, encouraged to invest in the EU. I think most of the EU citizens that live in Europe would like to see more investments into the infrastructure, education, and so on. So they would like to invest here. However, at the same time, they are very much concerned about the returns. They need the returns, as we said before, to achieve the pension adequacy. Therefore, quite often they do invest overseas, looking for good returns. So I would say, help us help you. And the financial industry, we talk a lot about the competitiveness, should also up the game and improve the competitiveness here. We know from reports from ESMA that retail investors pay 40% higher fees than institutional investors. So I think there is a lot of room for improvement in the EU to do something about the competitiveness and the returns here. And since we are talking about ISK, Sweden very clearly warns against forcing investors into certain sectors or geographical areas. They at some point did that. It did not work out. If it was, and I hope it is not, in the recommendations that are going to be published today, ISK, that was an example and a blueprint for the recommendations, would not be then included or would be out of it. So we would prefer that investors have choice where do they invest.
Can I go to Andrea or William first for the next question, which is on digitalization? It has been mentioned already that digitalization is an opportunity for spreading a little bit, isn't it? But it's also a risk. And you know, when I was listening about independent financial advice, I was thinking, be careful, because maybe one day artificial intelligence could be considered very independent. Then, you know, some people will believe that an advice from AI, you know, is the solution for this independent thing. What do you think about risk of digitalization in addition to the obvious advantages that we have?
Okay, I'll go step by step.
Okay.
And I'll start first on commenting on the previous question. Just to remind that insurance is already attracting savers' money and channeling it to what we call productive investments. Insurance companies in Europe, they have 9.5 trillion euros of asset under management, and 70% of their investment in equities, in corporate and sovereign bonds are already made in the EU. Second point, the ESK, that's indeed something very interesting to look at. But if you really want to look at the Swedish success story, you also need to look at the endowment insurance. 6 million contracts in Sweden. And that is also contributing to the investment culture in the Swedish market. Then third point on transparency, I agree with you, Andrea, on that one. You are absolutely right that transparency is not a silver bullet. It can help to achieve a number of different things, but you need to take that as a complement to other types of initiatives. Completely supportive of the dashboard in the PRIPSKI idea. I think this is very important. But let's be honest, it's also because we did not manage to get a PRIPSKI idea that was fully usable and understandable by consumers that we need to have a dashboard. But the idea of the dashboard at the moment, I think, is making a lot of sense, as long as it really focuses on what matters to consumers. So the total cost, whether there's a guarantee or not, insurance protection or not, and so on. And then about digitalization, I think that's something that is happening. So this is not something, you know, that we can push back. I see we need to look at it from the consumer perspective. And what we see in insurance is that you get a very wide variety of different types of needs and preferences when it comes to digitalization. You will have a number of consumers who actually prefer to go online. They like that. A number of consumers who prefer to have face-to-face meetings, and that makes it very important to have, you know, shops in the small villages, very diversified and present networks of distribution channels. But for the majority of consumers, actually what they do is they go hybrid. So they start by looking for information online, they compare different offers online, and before they make an informed decision, they actually go and see an advisor. So digitalization can help a lot in that context, whether it can help in having the consumers going through the questionnaire. I'm not entirely sure of that because I had my own personal experience here in Belgium where I had to do the knowledge and experience tests on a Sunday evening before my appointment with my financial advisor on the Monday morning. The test took me about 30 minutes. I consider myself as pretty financially educated, but actually on a number of questions I failed. That came as a surprise to me, moderately, because some of the questions I actually could not understand the link with the advice. So we spent some time with the advisor the morning after so that she can guide me through the questionnaire. They could explain the jargon also, and she acted as a translator. So again, that shows how useful financial advisors are to support consumer understanding. But you're right also, social media influencers, I think this is also what you had in mind. And there are a number of good things that are being done there in terms of awareness, in terms of promoting financial education. But we see a lot of risk also in terms of scam, for example, and so on. So yes, it's good to see the European Commission and the return investment strategy also taking action and trying to address this risk to the benefit of consumers.
We have to finish, and I want to deal with a little bit with pensions very, very shortly. I would like to deal with taxation, but fortunately the previous roundtable dealt already. I think it's very important, but let's put aside that. On pensions, what is really the problem with pensions? I mean, are we telling the citizens the right things? They should listen about that. I mean, are we talking about transparency? Are we really transparent on pensions? Is that to understand? And on these cultural differences that somebody mentioned about different countries, is that something that we are addressing rightly? Can you make a short comment on the pension issue? Andrea, yeah, maybe you, okay. If you want to start, Andrea, because
Look, I'm not working in the pension area, so I'm probably not the right one to speak about it. But I believe that as part of our SIU work, we are looking very carefully into the pensions, and we will come forward with suggestions on including on auto enrollment, pension tracker, pension dashboards, and I think this is probably a good way forward. In addition, of course, as you know, the revision of IORP and PEP.
We are definitely not transparent enough when it comes to pensions. And the first very big issue that there is with pensions is that, first of all, many people do not know how big the contributions are. What is even worse, they are not aware about the returns of their pensions. So it's difficult for them also to foresee how high the pension is going to be. And it's also quite evident from our report. There are cases and countries where even Better Finance with our qualified researchers struggle to find the data to disclose the real returns of the pension savings. So this is the one thing. And the second thing is, as I said already, even very well educated, literate, financially literate people are proactive enough to do something about their pensions. And that is why Better Finance really believes that the one way to deal with this problem is the auto-enrollment. And as I said already, also the big caveat and condition here is that people should be auto-enrolled in very good quality pensions, providing good returns.
Jacopo, you want to?
No, just telegraphic. Yeah, I would agree. I mean, we do have a problem with pension over-reliance on Pillar 1 is the elephant in the room. So yeah, absolutely. I think pension reform is where the test of the mettle of member states will come in the coming years to see, what's the real level of ambition. I mean, most of our countries are, as I said, reliant on state pension Pillar 1, and all the funds that are there are also not invested. So that's a big problem for me. It's pension reform is going to be critical in the next 5 years.
William, before you answer, being a French person, do you think that we don't tell the citizens the truth, or the citizens doesn't want to understand when they are told? I'm talking a little bit about the French example.
Okay,
pensions, and the need to pay for pensions and retirement.
all right. Okay, I don't want to make any enemies there. So I'm going to skip that question and just say that I've been living in Belgium for 20 years or more. I don't want to have any issues with trade unions in France or in Belgium. But Mario Nava said it very clearly yesterday. The first challenge for Europe is not Trump, it's not competitiveness, it's actually the demographic challenge. We got a huge issue here and we need to address it urgently. One other thing he said is there's a bright future for financial advisors because there will be a huge demand. I'm not entirely sure about that because for getting a demand, you need people to be aware that they're facing a pensions gap and a pension challenge. And I'm not sure people are aware. You see it clearly in France, but you see it clearly across Europe as well.
Sure.
Hence the importance of the pensions dashboard, the pension tracking system, auto-enrollment. And I think the European Commission can do a lot there in promoting good practices, inviting member states to do more. But that's really a huge challenge for the future, and not only for the European institutions and the industry, but for consumers in the first place.
Okay, thank you very much. You know, just in favor of the representative of the European Commission, it's clear that we don't have a representative here of the European Council, which will be the ones really to respond about certain paralysis in the European projects. Then thanks very much to Andrea, and thanks very much to Aleksandra, to William, and to Jacopo for your participation in the panel. Thanks to you.